Okay, folks, welcome to this week's Magnetic Trading Index review and trading tips. So let's kick off things and let's see what's on the agenda for this week. First of all, we're going to go over what's been going on in the last week. We're going to review some of our advisor trades for the week. We're going to show you how to build a story for your trades to make them high probability. And we're also going to give you some technical analysis and some tips for what to expect for the rest of the week. All right, so this quarter has just ended, and it ended in June, and it was actually one of the best performing quarters for almost 20 years. So I think the takeaway here is that whenever things look really bad or whenever there's blood on the floor, that is an opportunity to invest. So here at Magnetic Trading, when the coronavirus hit its worst months, it was kind of in March, April time, when the news was very dismal, we were actually actively looking to tell our clients to invest long term into a number of indices. The reason is that that's when there is value. When things are looking really rosy and the economy is really good, that's not the time to be investing. The opportunities come when things look really, really bad. And also, don't get distracted by the news. The news is a bit of a red herring. And remember that markets are always pricing in information 6 months ahead. So by the time you're getting news coming out and hitting you, there's no point in reacting on that news. You need to be looking 6 months ahead, because that's what the markets are doing. It's a little bit like oil as well. Not that I really follow oil, but when oil hit 23 bucks a barrel, we were telling our clients to get involved with that, because we expected people to use their cars again. We expected industries to start again. And oil was not going to go down to zero, so there was an opportunity there. But at the time, the news was really bad on oil, and no one was touching it. But when no one's touching it, that's the opportunity to get in. Okay, so last week on our advisor program is basically the trades that we take on our fund. Whenever we take them, we share them with our clients in a very simple manner. So we send alert messages to people's phones, and we had a first trade, which was the ASX trade. That was a nice winning trade. That was actually connected to an end of quarter trade, which was a video tip which we gave you last week. We then, on the 1st of July, we had a FTSE buy trade. In fact, I'm going to give you a review of that trade shortly. But that was a simple buy, FTSE at 6130, target was 6200, stop below 6050. That was a winning trade. And then we had a DAX trade on the 2nd of July. Again, buy 12,442, stop 12,379, target 12,532. A nice winning trade on that one as well. And the final trade of the week was on Friday. It was actually in our live room. So remember, for our advisor program, we meet in a live room every day where we discuss the markets, our trade plans and opportunities. And if there is a trade within those 20 minutes, then we'll take it. And it just so happened on this particular day, we did get one. It was an official trade. We sold the FTSE at 62.56. We had a target of 10 points and a stop of 10 points, which was a nice winner as well. Remember, it doesn't really matter the target and the stop. If the target and the stop is 200 points, it's the same as a target and a stop of 10 points. Risk is risk. If you're risking 1 or 2% per trade, then if you're targeting 100 points and risking 100 points, is exactly the same as targeting 10 points with a stop of 10 points. So basically we summarize the week for advisor with 3 app trades. So we went 3 trades via the phone. and we had one official trade in the live room. So 4 winning trades in total. The daily routine really for the advisor program is you join us for about 20 minutes a day at 5 p.m. Sydney, where we trade in live with you. We trade live with you, and if there's a trade, we take it. We also discuss the trade plan and what's going on with the markets. And outside of that, we send you a message on your phone via the app, which gives you a very simple message to trade. And again, these are just the trades that we take on our own proprietary fund. Okay, so I want to move on to building a story for your trade. So whenever I construct a trade, I want a number of elements lining up before I take that trade. So I'm going to take a trade which we issued on Advisor on the 1st of July. It was linked to the FTSE. And one thing I want to note as well is that whenever I take a trade, there is an element of market function involved with that trade. So what do I mean by market function? Well, if you've been following our tips for a number of weeks now, we've been teaching you things like the first of the month when there's pension money coming into the market. That's one example of market function. So it's something going on behind the scenes in the market that makes the market move in one direction or the other. Now, certainly there was a market function trade for the trade on the 1st of July. So let's go over to the charts and let's examine how we built this story. Okay, this is a 1-hour chart on the FTSE. So this is the 1st of July here. And the market opened on this candlestick here. So it's a 1-hour chart. Each candlestick represents 1 hour of action. This is the open here. Now on this particular day, we were telling people that the bottom of the range is 6060, and we actually wanted to buy if we got down there. You'll see that the market got down to 6082. It didn't go down here. Sometimes the market will front run a level. What does front run mean? It means that people are getting involved in the market just before a key level because they anticipate that there's going to be a lot of volume or a lot of buying or selling activity near that level. And that's what we've seen here. We've seen the market come down towards 6060, then get quite a big buying response. So that's the first bit of the story. We've come down to the bottom of the range, and at the moment the trend is up. So we want to be buying pullbacks in the market. Element 1. Element 2 is we have a nice pin bar reversal here on the 1-hour chart. Okay, so that's a nice little reversal signal. One thing we needed to note on the day was that the CAN breakout short here, which is a pivot point, was at 61.20. So generally, if the market's above the CAN breakout long, it will rally. If it's below the CAN breakout short, CAN breakout short is an abbreviation of Camarilla level. Okay, again, it's a pivot point. But if it's below the Camarilla level, then it often sells off. Now, below 61.20, we need to be a little bit careful because, as I said, whilst below it, it can just keep moving down a straight line. So we wanted to see price action move back above 61.20. So we've got this pin bar reversal here. We've got the action back above 61.20. We've got the bottom of the trend here. The trend is up as well at the moment. The market function element was, I don't usually take trades because actually when this trade triggered, it was about an hour and a half before America opened. I don't generally take a trade before America opens because America has an influence on the FTSE. However, on the 1st of the month, we know that pension money comes into the markets, and we know it's the first trading day of a new quarter, and America is generally has a tendency to put in a lot of money in the first day of a new quarter. So there was a reason that I expected there to be buying once America opened, and that really completed the story that allowed me to put an official trade out to buy the FTSE at 61.30. We had the stop below 60.50, below the bottom of the range, and we targeted basically back up to the medium point up at 6,200, which was hit about 3 hours later. So that was one example of our official trades that we took last week. And again, whenever we take a trade, we like to develop a story. The more reasons you have for taking a trade, the more high probability it will be, and the chances of success will increase. Okay, so some analysis for the rest of the week on the FTSE. Keep an eye on this 6060 level. Whilst we're above it, we're still bullish and expect any pullbacks to be bought. But if we do start breaking below there, then I think we're going to see a sharp sell-off. So, and I'm really still actually expecting a break below 6060. The FTSE's been in this range of 6060 to 6300 for quite a while now, and when it does break, there will be quite a bit of momentum. But I'm still favoring this break below 6060 to see lower prices down to 5900. But again, that's a view, and if you watched last week's video tip, you'll remember it's okay to have a view, but you must allow the market to confirm you're right. And we do that by looking at the charts, looking at the price action. The price action will always tell you if you're right or wrong. Okay guys, happy trading this week. Good luck with any trades that you're taking us. And if you're an advisor program, we look forward to working with you, seeing you in the live room and receiving our trades. If you're not an advisor, you've got you've got a few days to take advantage of that, and then we'll be closing down that offer. Okay, we'll see you next week as well for another video tip.